Welcome to the deep dive. Wow, what a weekend, huh? Markets just saw some pretty serious catalysts hit.
Yeah, definitely. There's this real wave of optimism you can sort of feel washing over things.
It's palpable, yeah. So today, our mission is really to dive deep into these shifting market dynamics. We want to unpack these recent trade deals everyone's talking about
Right.
and look at some pretty exciting crypto breakouts, plus, that powerful surge in equities, especially the AI-driven ones.
Mm-hmm.
We've pulled all this for you from a detailed market analysis report. It's dated July 28, 2025, that really gets into these catalysts.
And it's interesting, the report leans, pretty bullish overall on certain assets, but, and this is key, it flags this increasing risk, a potential 10% correction in the NASDAQ.
Okay, 10%. That's significant.
And other correlated risk on assets too. So yeah, definitely something we need to break down.
Okay, let's do that. The report mentions markets got permission to party from these trade deals. What exactly happened? What were those announcements?
Well, the big one, really, was a 90-day tariff pause with China. That's a pretty major signal.
Okay, just a pause, though, or something more.
It's seen as more than just temporary. It signals, maybe some de-escalation is possible, maybe paving the way for longer-term shifts. Plus, there were new pacts with the EU and Japan.
Ah, right. So a broader easing of tensions.
Exactly, kind of a global effort.
And the market reaction, you mentioned Bitcoin felt it first.
Yeah, Bitcoin popped pretty much straight away on that optimism. But what's really notable is how the Nikkei reacted.
Japan's index.
Right. It surged an impressive 6% after their deal was announced.
Wow, 6%.
Yeah, and that hints, maybe a correlated rally could spill over into the U.S. indices.
Okay, but the report says these are just starters.
Exactly. Starters, not finish lines. That's the quote. The real focus, it argues, needs to be on the underlying market flow, the momentum itself.
Right, the flow. And they mentioned closing out some NASDAQ longs.
Yeah, those positions they held since the monthly opens. An incredible 855-point return on those. They closed them last week.
855 points. That's huge. So for you listening, what's the takeaway from a return like that, beyond just the number?
Well, it really underlines that point about catalysts being just the start. It shows how important it is to recognize momentum, ride it, but also, crucially, know when to take profits.
Especially with big events coming up.
Exactly. Like earnings or, FOMC meetings. It's about riding the wave, yeah, but also being ready for that tide to potentially turn.
That makes sense. Okay, so speaking of strong moves, let's talk NASDAQ, Kyle. The report points out this, almost vertical climb it's been on.
It's pretty stark, up about 43% from that April 9th bottom. It's been, around 105 days now?
So how does that stack up historically? Are there parallels?
Oh, definitely. The report draws some clear ones.
Yeah.
History rhymes, right? After the post-COVID bottom, NASDAQ rallied hard, then dropped 15% after about 160 days. And after the 2018 crash recovery, similar thing, a 10% correction after 126 days. So the message is clear. These stretch rallies, they tend to correct. It's actually healthy.
Like the market catching its breath.
Sort of, yeah.
Yeah.
Even roller coasters slow down.
Right. And this brings us to Microsoft MSFT. The report says it's extremely correlated with NASDAQ.
Very tightly linked, yeah. NAS 100, NDX, whatever you call it, moves very closely with Microsoft.
So with Microsoft earnings coming up, what does that connection imply right now? It sounds critical.
It really is. Microsoft reports Wednesday, July 30th after the close. And the report describes MSFT itself as extremely overstretched.
Uh-oh.
Yeah, the warning is pretty direct. If MSFT corrects, say, 5% after earnings, that could easily drag the NAS 100 down 5% with it.
And that could flip the whole mood.
Potentially, yeah.
Right.
Flip that global risk on sentiment.
Yeah.
Plus, you've got the FOMC meeting also on July 30th.
Perfect storm for a sell the news event.
That's exactly the risk the report highlights. You get the build-up, then the event happens, and people just take profits.
And then there's seasonality. August, September isn't usually great for NASDAQ.
Nope. Seasonality often bites in those months, as the report puts it. So another factor to consider.
Okay, so lots of potential headwinds. For you listening, what are the practical things to watch? How do you navigate this?
Well, definitely keep an eye on RSI levels. Right now, it's around 70.
Which means?
Which, for indicator users, signals more of a controlled uptrend, not like extreme overbought conditions that scream reversal imminent.
Okay.
The advice is Maybe think about repositioning longs if we see dips of, say, 5 to 8%.
Mm-hmm.
View those as potential reloads, not roadblocks for the next leg up.
Reloads, not roadblocks. Got it. Any key levels?
Yeah, the report gives a clear invalidation level for the long bias at 22,956 weekly low. If we break below that, it could signal a bigger correction is underway.
Okay, useful marker. Let's switch gears to crypto. Bitcoin's been doing its classic liquidity hunts. What does that actually mean?
Yeah, classic Bitcoin moves. Liquidity hunts are basically those sharp, sudden moves Bitcoin makes. They're often designed to trigger stop losses or liquidate positions.
Especially the shorts, people betting against it.
Exactly. The report mentions a double inside 5-day failure. That's a chart pattern where Bitcoin tried twice to break down to new lows around that 115, 116K area, failed to hold below them, and then snapped back up sharply. This effectively traps the shorts, forcing them to buy back, which just adds fuel to the bounce.
Sneaky. So where's it headed short term?
The report's eyeing $123,000 as a near-term target. And it notes that the previous sideways chop actually benefited altcoins quite a bit.
Interesting. But here's the kicker, that correlation with NASDAQ AQ again. If NAS 100 corrects 5%, what happens to Bitcoin?
Right, they have that strong correlation. But Bitcoin usually has a higher beta.
Beta meaning?
It's basically a measure of volatility relative to the market.
Yeah.
Higher beta means it tends to move more percentage-wise than the market it's correlated with.
So more volatile.
Exactly. So a 5% drop in NASDAQ could easily mean like a 7 to 10% correction for Bitcoin, just because of that relationship.
Okay, so a bigger drop potentially. Where's the support for Bitcoin then?
The report identifies a pretty strong support zone between 110K and 112K. And the really key higher time frame support, the invalidation level, is down below 98K.
Got it. Now, Ethereum, described as having a massive breakout horizon. What's the setup looking like?
It's actually fascinating. On the higher time frames, ETH's current setup looks a lot like Bitcoin's big triangle consolidation back in 2020, right before it exploded higher.
Really? So similar potential.
That's the idea. The report suggests ETH could potentially surge towards $10,000 once it finally breaks out of this 3.5-year consolidation period.
Wow, $10 K ETH. What's the trigger?
The key is reclaiming that $4,100 level. That's a major support resistance zone. A break and hold above that, perhaps driven by some positive regulatory news. That could be the catalyst.
Okay, $10 K is a huge target, but surely there are risks there too.
Oh, absolutely. The current monthly and quarterly candles for ETH, they're described as extremely stretched.
Meaning?
Meaning, even after it breaks $4,100, a sharp pullback is very possible. Maybe back down to the yearly open around $3,300 just to test that breakout level as new support.
So a retest is likely.
Very common after major breakouts. And of course, same story as Bitcoin. If BTC corrects 10%, ETH is going to feel that significantly too.
Right, the correlation effect.
Yeah. But the big takeaway for crypto, the report says, is consolidation's birth monsters.
I like that phrase.
Me too.
Yeah.
It means these long periods of quiet sideways action can lead to absolutely explosive moves. ETH could mirror Bitcoin's 300% surge after its 2020 consolidation. But patience is key. You need to wait for those SR flips.
Support resistance flips where old ceilings become new floors.
Exactly.
Okay, and while ETH consolidates, altcoins are catching fire. What's driving that?
Yeah, regulatory clarity seems to be a big factor, like that Genius Act mentioned, unlocking flows into certain alts.
Any specific setups the report highlights?
It points out a few promising ones. SUI is apparently eyeing all-time highs, targeting maybe $5.04. AVI is looking towards $400.
Okay.
Link, it says, is making higher lows and just screams a $31 target. XLM, with its U.S. ties, seems to be following XRP's path, maybe towards $1. And XRP itself has an inside weekly pattern, teasing some upside.
Interesting list. Any practical tips for finding these?
Yeah, the report gives a specific suggestion, screen altcoins linked to certain influential entities. It actually mentions looking into those connected with Trump's World Liberty financial firm.
Okay, that's specific, worth looking into. Now back to U.S. equities. Mega caps are the engines, the report says.
Absolutely. They really drive the whole narrative because of their weighting in the indices.
So earnings this week, mega caps are key.
Well, Meta is one to watch. It's got an inside 2-week pattern. Looks like it might try to catch up to NASDAQ Q. Potential for 12% plus upside to all-time highs, maybe if earnings trigger a dip buy.
Okay, Meta. Who else?
Amazon's lagging its highs, but earnings could cause a big gap up. And Microsoft, well, we talked about that. Its vertical move is key for the index.
But carries that blow-off risk.
Exactly, because it's so overstretched, vulnerable to a sharp pullback.
And Apple How does the tariff news play into that?
That tariff pause is good news for Apple, helps fuel potential gap fills.
Dang.
Remember, they have huge China exposure, something like 60% of iPhones involve China.
Right, so targets for Apple.
Reports looking for moves above $250, then $225, and eventually challenging those all-time highs again.
Okay. Any general tips for trading equities around this?
The report suggests using longer-dated options, like March 2026 contracts, to give yourself time and position around these earnings gaps.
Okay, longer time horizon.
Yeah, and it frames any NASDAQ you pull back in August or September as potentially a gift for setting up swing longs, maybe using option calls for run into the end of the year.
A gift, huh? Interesting perspective.
But the core message is clear. Earnings are truth serums. These big company results really show what's going on under the hood.
Truth serums. Love it. Okay, let's pivot to the really big theme, AI. The report frames AI infrastructure as the driving force behind these rallies, especially in U.S. tech.
It really does.
Yeah.
And it draws this compelling parallel to the 1990s internet boom.
How so?
Think about companies like Cisco back then. They made fortunes like 7x returns just by building the plumbing, the infrastructure for the internet.
Right, the picks and shovels.
Exactly. And the report's take is that we're still early in this phase for AI, building the foundational layers. So potentially huge upsides still to come.
That's a massive perspective. So which companies are leading this AI infrastructure build-out?
Well, NVIDIA is obviously the poster child, right? Its chips are central to everything. Then Microsoft, deeply integrated, earnings coming up.
And still going vertical despite the stretch.
Right, though, with that 10-15% correction risk we mentioned.
And then there's Tesla. This potential XAI fusion sounds wild.
It really does. The report calls it potentially transformational. There's a shareholder vote expected in November.
What would it do?
It could grant Tesla the rights to invest directly in Elon Musk's AI venture, XAI, which is valued at like $113 billion.
Wow.
And the idea is to infuse that advanced AI directly into Tesla products, Robotaxis, the Optimus robot, creating what the report calls agentic AI.
Agentic AI. What does that mean exactly?
Think of it as AI that can truly understand, interact with, and act autonomously in the physical world.
Yeah.
Like truly lifelike robots acting as assistants, maybe even servants down the line.
That's mind-bending.
It could totally shift Tesla's identity from just a car company to a leader in robotics and AI. The report suggests maybe 150% plus upside potential if this happens.
Incredible. What about Google, Alphabet? Where do they fit in?
Google's Gemini is highlighted as a superior large language model, and it's driving revenue through tools like Notebook LM for making AI podcasts, actually.
Ah, interesting.
And VO3, which promises fully AI-generated films. Think about the cost savings of $400 million blockbuster, potentially made for $50 million.
That would completely disrupt Hollywood.
Absolutely. And Netflix is seen as a
Yeah.
big beneficiary.
How so?
By using technologies like VO3 to slash its own production costs. The report expects this to torpedo traditional Hollywood models and show up big time in Netflix's earnings, probably by October 2025.
So this AI wave impacts almost everything. The report calls it a re-industrialization phase.
Yeah, that's a key concept. It stresses the physical requirements, the massive energy needed for AI data centers, the skilled labor to build it all out.
So it's not just software.
Not at all. The report strongly recommends researching companies involved in hardware, infrastructure, energy, even nuclear power, mentioning GE Vernova and CE Guard. The company is actually supporting this huge expansion.
And this could actually boost the economy, prevent a recession.
That's the argument. This massive build-out could spur enough growth to potentially keep the U.S. out of recession for the next, say, 12 to 18 months. It's a fundamental economic shift.
So beyond the specific companies, what are the broader AI trends the report flags for you to be aware of?
Well, it sees a big shift coming, moving beyond current models like ChatGPT, Grok, Gemini, which it views as kind of 2-3 years old tech already,
Okay.
towards those agentic robots becoming more mainstream by maybe 2026. While AI is impacting finance, decentralizing things via protocols like NOV, its main driver right now is equities.
And the jobs impact.
Interestingly, the report suggests AI growth could actually create new jobs, offsetting fears about automation taking over everything, and the returns. It could mirror the roaring 20s or the 90s tech boom.
Like super microcomputer being up 100% already.
Exactly. Echoes of Cisco's 6x gains back in the day. It's that kind of potential scale.
Wow. Okay, so wrapping this up, It's a really dynamic picture, isn't it? You've got this underlying optimism, but you absolutely need vigilance.
Definitely. Catalysts are just the start. Stretched rallies offer those reload opportunities, and earnings are the ultimate truth serum. It's all interconnected.
From trade deals to single earnings reports, all amplified by this massive AI transformation that's underway.
Couldn't have said it better. It touches everything.
So, as you navigate the week ahead, we'll leave you with this thought to chew on. If agentic AI really is coming by 2026, if companies like Tesla are about to put it into robotaxis and Optimus robots,
Yeah.
what does that actually mean? Lifelike robots as servants. How could that fundamentally reshape not just the markets, but, your actual daily life in the next few years?
That's a heavy one to think about.
Definitely something to ponder as we watch all this unfold. Thanks for tuning in to the Deep Dive.